Thanks for having me. And it's good to be in this class. Like Diana said, took this class like almost 15 years ago. And I think it kind of started my energy journey through Stanford and then to E3, where I've been ever since Stanford, and then have stayed in close contact with the energy ecosystem here. Started guest lecturing for this class like 10 years ago, and then started teaching my own class a few years ago as well. And this is kind of a crash course overview of the class I teach called Electricity Economics. But yeah, what I want to talk today about is the electricity grid specifically and some of the trends of where the electricity sector is headed. The biggest trend of those being decarbonization. And I realize that that is a very uncertain word and term and thought right now that we live. So I'm going to try to put all of that in context and think about like where we've been, where we're going, and how all of that fits together. So just a bit of an overview of like where I'm coming to this topic from. So I'm at a mid-sized consulting firm that's based in San Francisco called E3, which is Energy and Environmental Economics. We're a consulting firm, but I would really classify us more closer to like an academic research group than like a management consulting McKinsey type of firm. We're very technical. A lot of the projects that we do and look like research projects where we're actually modeling the grid, taking in tons of data and producing a report and producing findings for our clients. And we have clients all throughout the electricity sector, whether it's utilities themselves or independent power producers that are trying to sell projects to utilities like wind farms or solar farms, regulators that are trying to set smart policy so they understand if they pass a law that says higher renewables or lower carbon or whatever it is, they need to have an idea for how that's going to impact costs and reliability and all these other things. So that's the type of analysis that we produce to help basically anyone and everyone within the electricity sector. So that's kind of where I'm coming to things from, and I'll try to work in some kind of examples of the topics that I'm going to talk about for where E3 has kind of injected into those topics. So the main topics that I'm going to talk about today are just an overview of the industry, focus on decarbonization specifically with an emphasis on renewables, and then some of the things that go along with that, like increased electrification, how we charge for customers for electricity through retail rates, and then distributed resources, and then just the utility business model in general. Okay, so jumping straight into things, the electricity industry is quite unique if you step back and think about it for a little bit. I mean, it is a very old, on the one hand, it's a very old industry. It was founded in the 1800s. Thomas Edison created the first power plant in New York City in the 1880s. So it's a very old industry, and there are not many industries that have been around since the 1800s that, number one, still exist, but number two, are actually poised for significant future growth. If you look at the electricity sector in the next couple of decades between now and 2050, by all accounts, the electricity sector is going to double in size. And that's due to things like electrification of vehicles, converting gasoline vehicles to electric vehicles, converting the way we heat and cool primarily heat our buildings from natural gas and oil towards electrification, but then other things as well, like artificial intelligence and all the data centers that are needed to power that. I'd say doubling the electricity sector is probably on the low end of things, to be honest. Before there was all of this view of what load growth data centers were going to contribute, I mean, just the vehicles and buildings and industry themselves was probably somewhere in the order of doubling. And so now with artificial intelligence could be more than that. So this is kind of, unbelievable, to be honest, that an industry that has been around for over 100 years is positioned like this. So if it is a very exciting industry to be a part of, and this creates a lot of challenges for how are we going to meet this load growth while doing all the things that we want to do, which is making sure that we keep costs reasonable, making sure that emissions are kept in check, making sure that the grid stays reliable. When we turn the lights on, we want to make sure the lights come on. And so There's a lot of challenges associated with meeting that load growth, and those are the challenges that everybody is thinking about. So let's talk about decarbonization. So before we dive into the electricity sector specifically, I think it's important to remember that the electricity sector is just one sector of the economy that produces carbon emissions. And if we're thinking about decarbonization generally, we have to be concerned about all of those sectors, how they work together, how they fit together. So the electricity sector in the US is about 25% of all of our emissions. It used to be a lot higher. The reason it has come down is the electricity sector of all of the sectors is actually probably the easiest sector to decarbonize. There's a few reasons for that. Number one, there are just fewer point sources of emissions. So like there are just fewer numbers of power plants than there are vehicles. So it's kind of easier to convert fewer numbers of things than larger numbers of things. You can kind of order electric utilities to do things a little easier than you can order consumers to behave in a particular way. So I wouldn't call it easy, but it definitely is one of the easier, more economic sectors to decarbonize, and that's why it's come down a little. Focus on decarbonization in this country has been a little bit topsy-turvy over the past 10 years. I was thinking this morning, the first time I gave this lecture for this class was in 2016 when Barack Obama was still president. And at that time, we were in the Paris Climate Accords. And then a few months later, Trump was elected, we went out. Then Biden came back, then we went back in, now we're back out. So a lot of decarbonization to a certain extent is driven by policy, and I don't want to discount the role that policy plays. But I also think it's important to keep in mind the context that policy does implement or impact things like decarbonization. First of all, regardless of what's happening at the federal level, the vast majority of electricity sector decisions are controlled at the state level. So the federal government can do things like create subsidies, but ultimately the states are the ones who decide which resources they're going to approve, if they're going to set renewable targets, decarbonization targets. And what we saw during the first Trump administration was when the federal government pulled back, a lot of other states filled the gap. And that's not just blue states like California and New York, but it's also even a lot of states of cities within what would otherwise be red states. So when the federal government kind of pulls back, a lot of states and cities fill the gap with decarbonization targets and policies and renewable targets and policies. That's one thing. The other thing is that even when you have a state where there's not really any large policy to speak of, like Texas, you can still see a lot of progress in decarbonization. Texas actually is leading the nation in wind and solar development, despite having no renewable portfolio standard, emission targets, or anything. The reason for that is because historically they have had a very open electricity market, and renewables have been just the least cost, most economic source of power. And so they have allowed those resources to interconnect to the grid, and based on economics, the private market has built those resources. So decarbonization is to a large extent impacted by policy, but it's also important to keep in mind kind of the role that economics plays. In thinking about decarbonization, and this is where the energy efficiency comes into play, anytime that E3 is hired to do a study of some state or city or country, we look at all the different sectors of the economy and identify what are the things that would need to happen for this economy to decarbonize. And there are, I would say, regardless of what jurisdiction we're looking at, there are really four kind of major trends or pillars of things that need to happen in any economy. One is that we need to use as little energy as possible through a mix of efficiency and conservation. And so this is, I think, the pillar of any decarbonization strategy. And it's not even just a decarbonization strategy, it's really the pillar of any least cost system. Like if you can avoid using energy that is probably going to be lower cost than building resources and building out the grid to provide that energy. I think so. Focusing on efficiency and conservation is critical, but at the same time, you can't efficiency your way to zero. And we have the system that we have in the United States. We've had relatively flat load growth for about 20 years. A lot of that has been driven by the fact that for 20 years, we've had some economic growth, but we've been offsetting that economic growth with efficiency gains, primarily through things like more efficient lighting, converting incandescent light bulbs to fluorescent light bulbs to then ultimately LED light bulbs. So those types of things have helped avoid load growth. Now we're looking at the fundamental transformation of entire sectors like transportation, converting all of our gasoline and diesel cars, converting all of our oil and gas heated homes and buildings, all of our industry from fossil fuels to electricity. So we should make that as efficient as possible, but there is going to be load growth associated with that. And so the 2xing of demand, that is like a post-efficiency number, right? Like if we were just say, oh, let's not worry about efficiency, let's just electrify everything in the least efficient way possible, it could probably be 3 or 4x. So there's a lot of efficiency baked into that, but there's going to be some load growth necessary. So if you look at the second pillar, which is fuel switching from all the things I just said, like gasoline cars to electric cars, oil and gas heated homes to electrically heated homes, that's going to cause demand for electricity to rise. And not only on an absolute scale, but as a percentage of where we get all of our energy from. And so a lot more of our energy is going to come from electricity than has in the past. Now, in order for this to be a decarbonization strategy, then the electricity itself has to be low carbon, right? If we're just converting gasoline cars to electric cars, but then we're creating electricity with coal, like that's not a decarbonization strategy. So electricity has to decarbonize in this process as well. And that can be driven by policy, it can be driven by economics. This is primarily what I'm going to be focusing on today. How can we decarbonize the electricity sector? There are, by and large, 3 strategies to decarbonize the electricity sector. The first is renewable energy. The second is nuclear energy. And the third is carbon capture and sequestration. So it's basically continuing to use fossil fuels to generate the electricity, but then capturing the emissions before they go up into the atmosphere and storing them somewhere like underground. So there are, depending on where you are in the world, different preferences among those different strategies. Some people pursue a combination of all of them. Some people focus more exclusively on one or the other. At least in California, we are primarily focused on the renewable strategy. There's not really any appetite to build new nuclear in California. In fact, there's a big fight to just keep the single remaining nuclear power plant that we have online. And then carbon capture is something that's being talked about, but it is not something that has really gotten off the ground yet. So I'm going to be primarily focusing on renewables today. So decarbonizing the electricity sector with renewable energy and some of the challenges associated with that. And then the fourth thing that I'll just briefly mention, not a huge focus of today's talk, but if you're thinking about decarbonizing the entire economy from a policy perspective, using less efficiency, great. Using more electricity, good. Decarbonizing the electricity that you do use, good. But not everything can be electrified. So there are some uses of energy in the economy that are just very practically difficult to electrify. So if you think about like planes, for example, if we wanted to make long distance planes that were electricity fueled, we'd have to put a lot of batteries in them. Batteries are very heavy. So for obvious reasons, putting really heavy batteries into planes to fly long distances is essentially impractical. And so the best way to decarbonize those sectors is to continue to use liquid and gaseous fuels, but just make those fuels themselves decarbonized. So for example, for planes, you could take renewable energy and use it to essentially electrolyze water into hydrogen and then create hydrogen gas that came ultimately from renewables, and then use that hydrogen gas, put it into a plane, and you have a fuel that is very light and compatible with that type of thing. So it doesn't mean it's the most economic, especially relative to jet fuel that we have today, but it is certainly more practical than battery-powered long-distance planes. All right, so now let's jump into what I said I was going to focus on, which is this third pillar, decarbonizing the electricity sector with a focus on renewables. I think one thing to set the stage is like, why the focus on renewables? I'm mostly focused on renewables because that's kind of what California is focused on, and that's the state we live in, and so it makes sense to talk about how California is pursuing this. But I think generally, if you look across the country, renewables do have a somewhat of an advantage relative to nuclear or carbon capture, just in the sense that they are very low cost, they're very commercially proven, we have tons of potential for them, and historically, they've been more publicly acceptable than the alternatives. Nobody wants to live next to a nuclear plant, at least what we've seen. In many states like California, nobody wants new fossil infrastructure, which kind of puts a damper on carbon capture and sequestration, but people have been more willing to tolerate renewables. I put a little bit of a question mark in that because even that is becoming a question mark. And I think that's one of the biggest kind of challenges to so many things, whether not even just decarbonization, but just keeping electricity bills reasonable, being able to meet the load growth that we have for electrification of all the things we want to electrify. Like, we're going to have to build new resources. And if we don't want to build nuclear, we don't want to build CCS, and now we also don't want to build renewables, like, it's just not going to happen. So the public is going to have to get on board with new infrastructure, and I think there's some open questions there, but at least historically, the public has been more open and receptive to renewables relative to other alternatives. That's kind of the basis of why renewables make sense to focus on. And so then the question is, like, how do you decarbonize the electricity sector with renewables? And this is where you can read tons of articles about all of this, right? Like, on the one hand, some people would say, oh, just build a bunch of wind and solar and shut down the coal and gas. On the other side, folks like in the current administration might say, we can't build renewables, they're super expensive, they're unreliable, the wind doesn't always blow, the sun doesn't always shine. So I think the question is, how can we actually build these resources to decarbonize the electricity sector? And there are really, building renewables and decarbonizing the electricity sector is really a challenge of not just building the resources themselves, but integrating those resources into the system in a way that actually helps us run the system economically and reliably. And so there are a few different tools available to actually do that. And I'm going to talk about each of those, whether it's energy storage, flexible loads, overbuild, or renewable integration. So to illustrate kind of this, I'm going to start with something that in the electricity sector is called like a dispatch plot. So one of the key tenets of running the electricity system is that the amount of electricity that's being consumed at any given time has to exactly equal the amount of electricity that's being generated. And the amount of electricity that's being consumed changes throughout the day. It changes based on when people actually turn on the lights. That increases demand or consumption. So this chart here is showing like a typical day for some electricity system. This black line here is demand. So generally, demand is lowest at night when people are asleep. As people wake up and they turn on the lights or start cooking breakfast, demand rises. Generally, as the temperature increases throughout the day and air conditioner load increases, then electricity sector demand increases as well. And then as it gets cooler and people start to go to bed and turn off their lights, demand once again falls. So this is a pretty typical demand pattern for any electricity system in many places throughout the world. And if you are running the electricity system, whether you're a utility or a grid operator, your number one job is to make sure that the amount of electricity at all points in time being generated is equal to the amount of electricity that's being demanded. And historically, the way that electricity utilities have done this is through certain types of generation that can ramp up and down. So a very flexible type of resource historically is natural gas. And so this is just showing a utility where you have a couple of generators that are always on, so like a nuclear and a geothermal generator. And then you have a big natural gas fleet that as demand rises, it ramps up. And then as demand falls, it ramps down. So I don't want to say it's simple to run an electricity system, but in this world, things were relatively easy. You just ramped the natural gas up and down to make sure generation matches demand in every hour, and really every second of every hour. Now, so this is easy, but what's the problem with this? The area of this gray right here is the amount of energy that's being generated from natural gas. And electricity that's generated from natural gas creates emissions. So you can just think of the area of this gray as essentially proportional to the amount of emissions that this electricity system is creating, and that's quite a lot. So one thing we might say is, okay, let's try to reduce emissions. What do we want to do? Well, let's build some wind and solar. So if we just take this system right here and build some wind and solar, what does that look like? Well, we can just build some wind and solar. Those resources, unlike natural gas that we can control, right? We ramp natural gas up and down to match demand. Wind and solar generate when the sun is shining and when the wind is blowing. So solar obviously generates in the middle of the day, right? The sun rises at maybe 7 a.m., it sets by 7 p.m., and its highest production is in the middle of the day around noon. Wind looks a little more variable, but at least in California, it actually has a very complementary shape with solar, meaning that it actually blows higher slightly at night and in the mornings and less in the daytime. So it fits very naturally with solar, but nonetheless, we can't exactly control these resources. And so the way that the system works here is that we build these resources, and then natural gas once again ramps up and ramps down to fill the gaps to meet all of the flexibility needs of the system. So we can see here, like natural gas from this hour to this hour is ramping down, and then it ramps up, and then in the middle of the day it ramps down, and in this hour it's barely on. And then as the sun sets, natural gas ramps up a lot, and it's on at a very high level here. So natural gas is still providing a critical balancing role in the system to keep generation and load in sync. One important kind of takeaway from just adding renewables to the system, again, if we think of the gray in this chart right here as the amount of emissions on the system, if we just build wind and solar, the area of the gray has gone down a lot. So emissions have declined maybe by half or something like that in this system. And so we might think, okay, fantastic, like this renewables thing is working really well. Let's just keep building renewables. Well, if we take this system and then maybe double the amount of renewables again, what does that look like? Well, that's where things start to go a little haywire, right? Like it's not the nice, like just pull back the gas story from when we added the first little bit of renewables. What we can see is that if we just double the renewables again, there are some hours of the day where now we actually have more renewables generating than consumers are actually demanding. And so to the extent that we have more solar and wind in the middle of the day than the system can absorb, this power actually needs to be curtailed, which essentially means making sure that electricity output does not go to the grid. Because again, the generation and load have to be exactly in balance. And so if demand or load is only at this level, we can't generate more than that. We have to curtail that amount of energy and make sure it doesn't push that power onto the grid. At the same time that we have more energy in these hours than we need, we actually still have to run natural gas in other hours because demand is exceeding the combined output of renewables. So we've kind of reached this conundrum where we've built a lot of renewables. We have more than we need in some hours, so we don't necessarily want to just keep building more renewables, but we still have not decarbonized the grid because there are some hours in which we don't have enough renewables to meet load, and so we're having to run natural gas. So the question then becomes, how can we actually continue to decarbonize this system without just building more renewables and creating lots of hours where we have excess renewables that we can't use? Well, the first and most obvious solution to this, right, is probably what everybody's thinking, which is energy storage. So if we just build some batteries, we could charge those batteries with what would otherwise be curtailed renewables, and then discharge those batteries in place of running natural gas in the evening and in the morning. So if we do that, let's say we just take this system and build a bunch of batteries, then maybe it looks something like this, right? Now the batteries are actually charging from some of this excess energy in the middle of the day. So it's no longer just purely curtailed like it was in this one. So batteries are charging and they're soaking up some of that solar energy right here. And then they're able to discharge in the morning and the evening. And that's what the purple is here. That's energy storage discharge. So this is essentially taking a system that's not 100% zero carbon, adding batteries to it, and creating, at least on this single particular day, a 100% zero carbon electricity system. And so on the one hand, you might say, well, that's pretty great. Like we've solved it. This is 100% zero carbon. Like what else is there to do? Well, on this particular day, yes. But the other thing to remember is that batteries, they've gotten a lot cheaper than they used to be, but they're still not free. So if we have this right here and we're trying to get this to lower carbon, like we can build batteries, but is that necessarily the cheapest way to decarbonize this system? And maybe there are other things we can do that are cheaper than just building a lot of batteries. So one thing that we could think about doing that would potentially be cheaper than building batteries and charging here and discharging here would be to just shift the way in which we consume electricity. So if we could do something where we actually reduce our consumption in these hours and increase our consumption during hours when renewables are producing a lot, like in the middle of the day when the sun is shining very brightly, then we could actually reduce the carbon emissions and utilization of natural gas just by shifting the way in which we consume electricity. And really the benefit of this is, to the extent that this as a strategy is cheaper than building batteries, then it's something that we would want to pursue. And not only is it very likely that this is cheaper than building batteries, but then also this is likely very much lower impact than building batteries, right? Batteries take a lot of materials, and there's a lot of geopolitics involved in where are we going to get those materials from, environmental impacts, and what's the recycling of those materials, and all sorts of things. So batteries are great when we need them, but if we can avoid them, then we can potentially decarbonize at lower cost and lower impact. So then you might be thinking like, well, what is this, like, how can we actually just shift our electricity usage from these hours of the day to these hours of the day? Many of the ways in which we use electricity are not shiftable, right? Like we are in this room right here, the lights are on, like we need this power right now. Like if the grid is like, well, I'll turn the lights on at 11 p.m., like that's not useful to us because we're here right now, we need this power. But many other types of electricity can be shifted at relatively low cost. One example of that is the way in which we heat and cool buildings. There's lots of examples of flexible loads, but I like the example of like shifting heating and cooling loads. So if you think about a typical house in California, the way that it works is people go to work, and while they're at work, no one's at home. And so naturally, if no one's at home, like you don't want to be wasting energy and running the air conditioner. So people turn the air conditioner off. Well, throughout the middle of the day, when it's very hot, the home is then heating up throughout the entire day. People then get home at 5 p.m., 6 p.m., whatever it is, and their home is very hot, and they need to cool it down. So they turn on their air conditioner and cool it down right at 6 p.m., which is right when the sun is setting, and meaning that the resources that are needed to provide that cooling energy are natural gas. But what if instead the home was smart and it was programmed to actually run the air conditioner throughout the middle of the day when we had essentially free solar energy that it could soak up? And then when the person got home from work, the home was already cool and it didn't need to be turn on the air conditioners as much or to the same level as if the home was heating up all day. So just allowing the home to kind of cool itself in the middle of the day when we have very cheap, low carbon solar energy on the system can be a smart way to reduce carbon emissions and avoid things like energy storage. So there's other things we can do as well. Electric vehicles is another one. You know, a lot of people think about electric vehicles as you kind of drive around and then you come home and you plug your car into your garage. And while that can be, you know, useful, like people need to be able to charge their car at home, people's default behavior could also be that you drive to work and charge your car at work, and then you come home and then don't necessarily need to charge it and then drive back to work the next day and charge it at work. So if you're charging your car at work, that means you're charging it in the middle of the day when the sun is shining and we have cheap low carbon electricity. So there can be lots of strategies for certain things that we need energy for, but we don't care as much when we get it. Flexible loads can be a way to help better align our uses of certain types of electricity with when renewables are generating at high levels. Okay, so that's our second integration strategy. We covered energy storage, we covered flexible loads. The third strategy for decarbonizing is, let's assume that, you know, we have used all of the flexible load options that we have and batteries are very expensive. What would another strategy be? Well, another strategy might actually just be, let's just build more renewables. And I think this is kind of an underappreciated strategy, or something that is not very intuitive when you initially think about things. But if we look at this right here, we have a lot of wind and solar, and we have a lot of curtailment of wind and solar, but we're not at zero carbon. So we could just take this and just build more wind and solar. And what would that look like? Well, what it would look like is it would, yes, lead to more curtailment, but it would also lead to less natural gas use. And so here we can see again, if the emissions are proportional to the area of gray here, which is natural gas, then just continuing to scale up wind and solar will reduce the gray. And so this is, I think it's just important to keep in mind as an option. To the extent that renewables are very, very cheap and cheaper than energy storage, then this might be a path that utilities or policymakers want to pursue. Now, I think it's unlikely that like this situation right here where we have this much curtailment is ever going to come to be the optimal strategy, but I think it is important to keep in mind that an optimally planned electricity system is not going to avoid all levels of curtailment. Like, we are going to have some times of year where we just have more renewable electricity than we need, and that might be part of an overall least cost electricity system. Okay, and then that leads to the last strategy. So we've covered storage, flexible loads, and overbuild. And then the last strategy for taking this renewable, partial renewable system and continuing to decarbonize it further is something called regional integration, which essentially means expanding the grid over larger geographic areas, which what that does is it has the effect of smoothing out renewable profiles, right? So if this solar profile right here, right, where the sun rises at 7 a.m. and sets at 7 p.m., and especially in the very early sunset hours and late sunset hours is, generation is going to be very low. If we were to do something like create a nationwide grid, right, we would essentially flatten and elongate the entire solar profile because the sun is rising on the East Coast 3 hours before it's setting on the West Coast. So we create this like long arc of a sun that kind of spreads this out. And the same is true for wind, right? The more we can balance wind over larger areas, the much higher likelihood when wind is not blowing somewhere, it's going to be blowing somewhere else, and it's going to create this overall smoothing effect. And so if we just take this and kind of assume some level of regional integration that smooths out these profiles, we can see that maybe we can convert a system that looks like this into something that looks like this. And that reduces, again, here it was without regional integration, the amount of gray is emissions, and then with regional integration, the amount of gray has gone down. So we've reduced emissions. And to a large extent, this is essentially like a free strategy, right? We have to build more transmission sometimes to facilitate this type of regional integration, but sometimes the transmission is actually already there, and it's just a question of how are we going to use that transmission. So if you look at, for example, in the Western United States, this is what our grid looks like. So this is the western half of the United States. We got like California, Arizona, New Mexico, Nevada, Utah, Colorado. Like these are all our western states. Each one of those bubbles is essentially a separately run electricity grid. And all of these grids are connected to each other. Like they have transmission that goes between them, but they operate functionally as if they're not very well connected. And the reason for that is politics. Because the Western United States is a very politically diverse region. We have a lot of the coastal states, Washington, Oregon, California, that lean very blue. And we have a lot of the interior states like Idaho, Montana, Wyoming that are very red. And there's just a lot of distrust, and grids don't want to be connected, coordinating with each other, because California is worried about, like one electron of coal might sneak onto our grid, and the red states are worried that, like the liberal policies are going to impact my rates and reliability, and so they just have decided we want to run our own systems. But the impact of that is that it's creating higher costs and higher emissions for everybody. And so figuring out how to break down those barriers is a challenge. This is just one example in the Western United States, but it's kind of a challenge everywhere. We are making progress in the Western United States. There are 2 integrated market frameworks that are trying to get up and running as we speak. You might have heard about those. There's the Markets Plus, what people call Markets Plus, and then the California grid has started something called the Enhanced Day-Ahead Market. And I think, positive developments that this grid is trying to become less fractured, but it's probably going to look like in a few years, instead of 38 different bubbles, it's going to have 2 different bubbles, which is an improvement, but also not great. Like it'd be a lot better if it was just one bubble, all coordinating with each other. And I think even having 2 bubbles is going to be difficult to see how things work out. But nonetheless, there's a lot of emissions and economic benefits from getting better coordination across really wide geographic areas, because ultimately it creates smoother renewable profiles, better economics, lower emissions. And then, of course, this map right here is just the Western United States. So for things to really get great, like we'd be able to interconnect the entire United States, that would actually require new investments beyond just the politics of it. The West and the East and Texas are all electrically isolated from each other. So new transmission lines would need to be built between all these regions to create one national grid, but there would be a lot of value in doing that. So we'll see if that ever goes anywhere. But I would say that's not on the near-term horizon. Okay, so the last thing I want to say about renewable integration before we talk about retail rates and some other stuff is around the topic of reliability. So if we just go back to this chart right here, this is a fun like thought exercise and kind of visualization of decarbonizing the electricity grid and thinking about renewables. But this is just one day, right? This is like one illustrative example day, a 24-hour period. What demand looks like, which is the black line, changes every day, right? On a very mild day where it's not hot, demand might be really low. On a day where it's super hot and everyone's using air conditioning, demand might be really high. If it's a sunny day, we might have lots of solar. If it's a cloudy day, solar might go down a lot. Wind also varies significantly on a day-to-day basis. And so this gets into the topic of reliability, which is not just ensuring that you can match supply and demand on an average day when everything is kind of just as you would expect, but during the worst of conditions. And at least in the United States and in many other countries, we have a very, very high expectations for reliability. Most electricity grids are planned or designed that the power should not go out from a lack of supply and demand mismatch more than once per decade. So that's about the highest tolerance that politics will tolerate from keeping the lights on from what's called a resource adequacy, or making sure that we have enough generation to meet demand. So if you're trying to meet this once per decade reliability standard, you have to be planning for the worst case conditions. So not just one example day, but many days across the entire year. What this chart is looking at is an entire year's worth of data, not just one day. Each of these bars here on the bottom represents 1 week. So there's 52 different bars here, so for 52 different weeks. This is actually a simulated system looking multiple decades into the future for a very deeply decarbonized system. This is looking at the New England electricity grid. We've added a lot of, this is from a study that E3 did, we've added a lot of nuclear and hydro, a lot of wind, that's the blue, and a lot of solar, that's the yellow. And if you take the New England grid and you play it out and you add all these resources, you see that many times throughout the year, the grid actually is running at essentially 100% renewables. It's all nuclear, wind, and solar. And if we like zoom in on this week right here, this is 7 different days in a row. So like 1 week right here. This is a 100% renewable week. We have a mix of nuclear, hydro, wind, solar, and a little bit of batteries to help balance everything out. But this is a 100% renewable week. And the reason is because renewables are having a really high production week in this. Wind is blowing at relatively high levels, that's the blue. Solar's shining at relatively high levels as well, that's the yellow. But not every week looks like this, right? There are some weeks, like if we look in this week early in the year, where renewables are having a very bad week. And you can just see the difference in blue, right? This was the good renewable week, how much wind, which is the blue color there is, relative to this week, how much wind there is. And then some days that have a really low solar output, clearly very cloudy on this day. Well, if we're going to maintain reliability on this system, even with this quantity of renewables, we have to have some resource that can ramp up during these periods of low renewable output. And again, energy storage is not going to help in this, because energy storage requires charging up when we have excess renewables. But if we have a period like this where we have no periods of excess renewables, there's nothing for storage to charge from, and storage has long ago run out of charge many days before this. And so we need something that can ramp up. In this system right here, that something is natural gas, but really it's any type of dispatchable resource that can ramp up and generate for as long as is needed. So fully decarbonizing requires more than just renewables and energy storage. It requires a concept of clean firm generation, which is a resource that's clean, that can generate whenever you need it for however long you need it to generate. And there are a few different kind of, I would call them pre-commercial options for clean firm generation. could be hydrogen resources, which is essentially basically like natural gas plants, except instead of burning natural gas fuel in it, you burn hydrogen fuel in it. Could be geothermal, could be ultra long duration energy storage. So energy storage that can last for hundreds or thousands of hours instead of just like one day. Could be nuclear, or it could be carbon capture and sequestration. So a few different options for those, but something beyond just renewables and batteries will be ultimately needed to keep the grid in balance. I will say, so if you look at this system right here, like this is a very deeply decarbonized system. If you look at the total quantity of emissions, again, the gray, the area of the gray here is the emissions of this system. So everything that's tan, blue, or yellow is emission free. And the only emissions on this system is the gray. So the emissions quantity is very small, but yet we still have a very large fleet of natural gas that can be ramped up if needed for reliability. Yeah, if you were to say, I want to do this without any natural gas and only do it with renewables and storage, you would essentially have to build out the renewable and storage fleet for your worst week. So you'd have to take this week, this is your new like binding constraint. You have to build out renewables and storage for this week. If you did, and again, there are renewables that are generating on this week. So like we could just scale up renewables, do some overbuild. We could do that. The problem is what we would do is that on all the other weeks where we already had enough renewables, we would now have way more renewables than we need, and it would lead to tons of excess curtailed energy. Yeah, question?
Which energy resource are you most optimistic about that would be able to fill in these gaps?
If you would have asked me a year ago, I probably would have said hydrogen. The reason why I like hydrogen is because if you look at like what this system needs to kind of fill the gaps, it's generation that can ramp up to a very high level. So this is like 32 gigawatts, right? So if we like match up the 32 gigawatts to this, like this is 32 gigawatts. So on this week right here, like the area here on average, it's only like 10, but for periods of time in this week, it's dispatching at like that level. So really what we need is something that can ramp up to very high levels for short bursts and then kind of just shut off completely. And like if we go to this week right here, like we don't need anything. Like this is 100% renewable. So if we think about the types of clean firm that like fit something that can ramp up and then ramp down or potentially turn off for an entire week, hydrogen fits that bill very well. Something like geothermal or nuclear, those resources are really designed to just run all hours of the year. They don't ramp up and ramp down very much. And so they're not necessarily as symbiotic with this type of high renewables world. I think long duration storage could be an option as well, but I think there's open questions as to the commercial viability of long duration storage. I mean, you could say the same for hydrogen, but at least hydrogen is like the tech like is there, whereas long duration storage, there's still a lot of research that's being done. Carbon capture and sequestration, I think the challenges there are more around politics than anything else. Like, are jurisdictions that are pursuing decarbonization going to allow new fossil infrastructure? So yeah, I would have said like a year ago, I would have said hydrogen. I think now it's probably an open question just with the hydrogen tax credits being in question. And yeah, I think there's a lot of open questions right now, but yeah, I probably actually would still say hydrogen. All right, so yeah, and then kind of just playing this out, last point on this slide, this is a couple of summary charts from all of the previous stuff we were looking at. But if you look at how the electricity sector might play out if we pursue a decarbonization strategy, or even if we don't and we just allow economics to play out, what it might look like. These two different charts right here represent the installed capacity of resources, and this represents the amount of energy that those resources are actually producing. So one thing you'll notice here is that by and large, the resources that are being added to the grid here are wind, which is the blue, and solar, which is the yellow, and storage, which is the purple. So really the growth in resources here is renewables and storage, but this gray here is natural gas, which is really the backup generation resource that can ramp up when these wind and solar resources are having a bad day. This is the installed capacity of the resources, which means if we wanted to run them full out, what could we run them at? But this is how much energy we're actually generating from them. And the key point on this chart is that even though the capacity of natural gas is staying relatively constant, the utilization of natural gas is going down. And that's because we're adding more and more renewables, meaning that we actually only need to run our natural gas in fewer and fewer hours per year as we add more and more renewables to the system. So as we add renewables to the system, we can actually use natural gas a lot less. And so this is like a key point of decarbonizing in an economically efficient way, is to add renewables and storage, yes, but also maintain something firm and dispatchable. And I think this is where a lot of advocates kind of lose the plot. People think that shutting down natural gas is like a decarbonization strategy in and of itself. That's not really true, because we only use natural gas when we don't have enough renewables. Like we always, based on economics, dispatch gas after we don't have enough renewables. So it's already always filling the gap. So shutting it down doesn't do anything except actually just increase the risk of blackouts and increase prices. And both of those things are actually a hindrance to decarbonization, right? If people feel like their electricity prices are going up or they see more blackouts, like they are going to blame renewables, and that could stall renewable progress. So really the best strategy is to build renewables, yes, as much as fast as possible, but maintain something dispatchable as a backup fleet that we hopefully will be using less and less, but when it's there, we need it, right? Like even in 2050, producing barely anything from natural gas, but we have all of this installed capacity for those like 1 or 2 weeks a year where renewables are having a really bad week. Okay, so that's the story of renewable integration. I mean, I think the summary from that, right, is that to decarbonize the electricity sector, renewables is one strategy. We can build a lot of them, but we need to maintain something firm and dispatchable as backup. Okay, so I'm going to just talk about a few more topics here to kind of round out the decarbonization of the electricity sector. And so let's jump into electrification. I mentioned this at the beginning, but from an economy-wide perspective, electrification is very important, right? If we want to decarbonize the entire economy, we have to take sectors like transportation, where we currently have a lot of cars, trucks, and buses that run on gasoline and diesel fuel, and electrify them. And that not only is true for transportation, but it's also true for buildings, the way we heat buildings, not just for like actual building heat, but even water heat as well. A lot of our water heaters in the US are natural gas powered. And so converting those to electric water heaters, doing all of those things is going to increase electricity demand. Now you'll notice in this plot right here, which is also a plot from the same New England study that we were looking at earlier, demand increases in over a 30-year period by about 92%, so almost doubling. You will notice that the kind of base consumption that we're starting with is actually going down over time, right? And that's despite a lot of underlying economic growth over this period. So population, building stock, like all of those things are increasing, but base electricity consumption is going down, and that's because of energy efficiency. So that shows the role that energy efficiency plays in helping to mitigate load growth. Like we're still going to have some load growth, but energy efficiency can help moderate that. And then these here are all the electrification. So not just the existing building stock, but electrification of heating in buildings, electrification of transportation, electrification of industry. So for example, industry would be like taking factories that use natural gas for heating and creating new products to actually using electricity to get their heat. Load is going to grow. We're going to have to build a lot of resources to meet those loads. One interesting thing about load growth is that it's not just the quantity of load that's growing, it's when in the year that load is occurring. Right now, the hardest time to meet electricity demand is in summer afternoons when air conditioning loads are very high. As we electrify buildings and convert a lot of what is now natural gas heat to electric heat, the most challenging time of the year is actually going to become the winter time. So building peak load or electricity system peak load is going to shift from the summer to the winter in most grids in the United States, and we're going to have to plan accordingly to build enough resources in those periods. So electricity load growth is a challenge, but at the same time, load growth is also beneficial because if we can take our grid and flow more energy through it, that means we're using the grid more efficiently and rates could come down. So using the grid more efficiently by flowing more power through it could help actually reduce electricity rates. Okay, and so then another topic that I want to talk about is the way in which we charge for electricity. And this is kind of a key aspect of encouraging the behaviors that we want to see. So we talked previously about flexible loads and getting customers to cool their homes in the middle of the day as opposed to in the evening, or charge their cars in the middle of the day instead of in the evening. That's like a fine idea. It's a great idea, but it only works if people actually do it. And people are only actually going to do it if they have some type of incentive to do it. Historically, the way that we've charged for electricity, there's really no incentive to do that. Historically, the way in which we've charged for electricity is just purely based on, at the end of the month, how much electricity did you consume? Multiply that by some rate, that's your electricity bill. So that type of structure is called a volumetric electricity structure, which essentially means as your usage goes up, your electricity bill goes up as well. This is a very common way to charge for electricity because it's very simple. Like everyone understands it. You use more, you get charged more. But the problem is this is not necessarily aligned with actually getting people to consume electricity in an optimal way if we want them to consume at certain times of day. It's also not aligned with necessarily other policy goals that state policymakers might have. For example, in California, we've actually historically not had this type of a structure. We've had something called a tiered structure, which is the way that this type of structure works is for your initial portion of electricity, you get charged a relatively low price. Once you use a certain amount of electricity, the price goes up. Once you use a certain amount of electricity above that, the price goes up even more. The impact of this structure, which is called a tiered rate structure, is that a couple of things. One, this puts more electricity costs onto larger and richer users of the electricity system. So generally people that use the most electricity have the largest homes, tend to be wealthier, and so this is a way to put more of the costs onto those people. The other thing is that this has a really big encouragement of energy efficiency, because you can think if most people are kind of in this second or maybe third tier, small reductions in consumption can lead to large utility bill decreases. And so on the margin, there's a very strong incentive to do energy efficiency. So there was a lot of policy reasons why this type of rate design was historically favored in California and why we had this type of rate design. Unfortunately, this doesn't really line up with the policy goals of California today for a couple reasons. Number one, this doesn't do anything to encourage what time of day you consume electricity. And secondly, what we're actually trying to do in California right now is not as much get people to reduce their consumption, but actually increase their consumption by things like buying electric vehicles and electrifying your home. So if you want people to buy an electric car and they're going to see that their electricity bill will skyrocket by doing that, then they're not going to be as incentivized to do that. So what California has shifted to is a time of use rate structure where we've gotten rid of the tiers and we've charged lower rates during times when electricity is abundant and cheap and low emission, and charging higher rates in the other periods. So for example, California has low rates in the middle of the day when the sun is shining, higher rates in the evening when the sun is setting, and we have to run expensive natural gas plants. What potentially we could move to that would be even more optimal is something that has a higher fixed charge. And if the grid has to recover a certain amount of dollars, if you charge people a higher fixed charge, which is just a monthly fixed charge required for being hooked up to the grid, if you do that, then you could actually charge people less per unit of electricity. So the slope on this type of rate design is flatter than the slope here, meaning that the rate that you get charged per unit of usage is lower. And what this would do is actually, you could still have a time of use construct, but this would lower the price, which would be even more beneficial for electrification. If you can charge people a lower rate, then buying an electric car and increasing your consumption doesn't increase your bill as much. So this would be beneficial for those policy goals. So California is working to implement something like this. There has been some concern about the distributional impacts of a large fixed charge, and California has looked at things like differentiating the fixed charge based on your income. That, of course, well, not of course, but one could easily see how trying to charge people different amounts based on their income is very difficult for a utility to do that doesn't necessarily have that data. All sorts of privacy issues. Like PG&E is not the IRS, and so it's been very difficult to actually get that implemented, but nonetheless, that's something that policymakers in California are looking at. Okay, so that is retail rate structures, and then a couple of things to close out with distributed energy resources and the utility business model. So at the same time as we've been talking about the grid itself decarbonizing, which means utilities building renewable resources like wind and solar, battery storage, customers also have the option to potentially self-supply some of their own energy. And this could be a lot of different things, but primarily one of the biggest sources of self-generation is rooftop solar, and particularly in California. And rooftop solar has gotten a lot bigger in recent years as the price of solar has gone down. There's a question of, should this be something that's encouraged? Is it beneficial? What are the costs? How should we think about this? The way that rooftop solar in California is encouraged is historically through a policy called net energy metering. And essentially what net energy metering allows is for customers to sell electricity back to the utility at the same price that the utility is charging customers for electricity. And like many historical things in the electricity sector, we kind of have this policy because it's very simple and customers can understand it, right? Like that's why we have a simple rate structure, right? Is because like grandma and grandpa can understand the more electricity you use, the more you get charged. People can understand that if you have rooftop solar and you're selling power back to the utility, you can sell it back at the same price that they charge you for it. The problem is this creates all sorts of issues. First and foremost, the price that the utility charges you for electricity has a lot of costs baked into it, right? It's not only the cost of generating the electrons, but it includes the cost of paying for the entire grid that was used to deliver that electricity. And not only is it those things, but it's also a lot of public policy charges for things like energy efficiency programs and paying off old charges that the utility has. And so if you sell power back to the utility, they're paying you for a grid that you're not providing. Like all you're providing when you produce solar on your roof is the cost of generating the electrons. So all the utility should be paying for is what they're avoiding by generating the electrons themselves. They still have to recover the costs for the grid. And if they're required to pay the full retail rate, which includes the cost of the grid. And essentially that means they're not able to recover those grid costs from whoever puts solar on their roof. They are regulated, which means they're allowed to recover all of their costs. They inevitably have to just raise rates on everybody else. So net metering historically created this phenomenon called a cost shift, which means that customers who put solar on their roof were not fully contributing to the cost of the grid that they were using, and the utility had to raise rates, and that then raised electricity prices and electricity bills for everybody else. This problem used to be relatively theoretical. I would say we're kind of living in the future right now. California has an electricity crisis. The number one cause of that is net metering. The number two cause is wildfire costs. But right now, our rates in California are about twice the national average. About 40 cents per kilowatt hour. National average is less than 20. What's the most egregious thing about that is that we live in a state with abundant natural resources. Like, there is no reason why we should have expensive electricity in California. If you look at the most expensive state, Hawaii, which California is just a shade below Hawaii, like, it makes sense why Hawaii has like expensive electricity. They're on an island, they have to like boat in diesel fuel to run their power plants. Like, okay, we'll give them a pass. But California, we live in like the most resource abundant state. We have tons of solar, tons of wind, tons of geothermal, tons of hydro, tons of access to natural gas pipelines. We have expensive rates because of bad policy decisions, right? We have historically enabled policies like net energy metering that, by the Utility Commission's own account, are causing electricity rates to be about 25% higher than they otherwise would be today because of this policy. We also have done lots of things, like decided we were going to shut down natural gas as a decarbonization strategy. But again, shutting down natural gas doesn't decarbonize because we were already only using that when it was the only thing available. Anytime we shut down a natural gas plant, not only does that increase the risk of blackouts, but it actually means that when we would have otherwise been using that natural gas plant, if it's shut down and retired, we're now going to have to use another natural gas plant that by definition is less efficient because we would have been running the most efficient plant first and then the less efficient plant. So actually, shutting down natural gas actually increases carbon emissions, all else equal. So anyway, I digress. But the California has been working to reform this policy. We passed something a few years ago called Net Metering 3.0, which means that you can't exactly sell power back to the utility at the retail rate. You can only sell it back at a slightly lower rate. That doesn't fully solve the issue because customers are still able to reduce their purchases from the grid and avoid the full retail rate. If we had something that looked like this, this would actually solve most of the problem because it would charge everybody a fixed fee for being connected to the grid and charge them for actually the grid themselves. And then solar would only be able to avoid the charges of actually generating the electrons. And so that would mostly solve the problem, but we'll see what happens on that front. Rooftop solar is one of the most politically, at least historically, most politically popular renewable programs that we have. Like, when people ask me what I do, I say, oh, I work in energy. Like, what does that mean? I'm like, oh, electricity and renewables. They're like, oh, like solar. And what they mean is rooftop solar because that's very visible. Like, people see it, they connect with it. Like, they think that they're like, when you put solar on your roof, you're like disconnecting from the grid, but you're not. When you put solar on your roof, you are drawing power from the grid at night and you're sending power to the grid in the middle of the day. So you're very much relying on the grid. It's just like solar that is on your roof instead of in the desert. The problem with that is a couple-fold. Number one, rooftop solar that's on your roof is often in places that's a lot less sunny than the desert. I live in San Francisco, very foggy, very cloudy, not in the desert. Solar in the desert can be installed with what are called trackers, where they track the sun throughout the day, so they're always facing the sun. Rooftop solar sits at the angle of your roof, which, if it's lucky, might be facing the sun, but 9 hours out of 10 is not facing the sun. All of that has the effect of one panel of rooftop solar produces about half the amount of electricity as one panel of desert solar. What that has the effect of is if we have certain amount of energy demand that we need to meet, if we install rooftop solar, we're going to have to install about twice as many panels. If every panel produces half the amount of electricity, we need twice as many panels. Twice as many panels means twice as much materials, at least twice as much cost, because economies of scale for large desert solar is significantly cheaper per panel than rooftop solar. California has historically operated like dollars don't matter, but I think we're seeing the pitfalls of that right now. We have an electricity and affordability crisis in this state, and we'll see if California is able to continue to make progress on renewables if we continue to act like that. The last thing I'll say, and this has to do a little bit with also thinking about the future of the grid. The way to decarbonize and run the grid efficiently and smartly is to have as much of an interconnected grid as we can make. So we talked about the idea of geographic diversity. Renewables built in geographically different areas so that the sun and wind can balance each other out. We can get smoother renewable profiles. All of that means higher reliability, less backup generation, better economics, better reliability, all of that. In order to facilitate that type of an outcome, we need an electricity, a very large and very well robust interconnected electricity grid. So the role of the grid is going to grow. The role of transmission and distribution, like we need more of that to connect more things. I think there was a little bit of a somewhat misguided notion a few years ago that like the future of electricity was homegrown. Like everybody was going to microgrid themselves, and my home is going to be net zero, and I'm going to produce all my electricity on my particular plot of land. But that is not an economic or efficient way to structure our electricity system. Like, yeah, it might be great to have backup generation at your house if the broader grid goes down, but you are not avoiding your connection to the grid. It's still very economic to rely on the grid, and not just rely on like the neighborhood or the city or the state, but like as far deep into it as we can. Like California needs to be relying on like New Mexico and Wyoming and Texas, ideally relying on East or West Coast states. So the more we can build out the grid, the more economic the transition will be, the more reliable, the lower carbon it will be. Thanks, everyone.